Hey guys, just want to make a quick video to overview Norway and their state capitalism system. This is for Professor Tokarev's class, Comparative Economics for Northwood University. My name is Colin Ulvand, and I'll be walking you through everything that Norway has to offer in terms of their economic system. So come on in and let's find it out. So just quick background in Norway. It actually has a very long and storied history. Most people know it from the Viking days and the Viking lore, actually. They gained their independence in 1903 from Sweden. They were once just a collection of kingdoms, just like the other Scandinavian nations. They're actually also the northernmost European country. As you can see on this map to the right, sitting just east of the Norwegian Sea and above Sweden, Finland, and Russia, making it the highest or most northernmost European country. And they also run a constitutional monarchy government, which is the most popular in the world, actually, which has a king or queen at the head and a parliament. Now, the economic history of Norway, they actually have a feudal economic model before their industrial revolution, which is before the 1900s. It was agricultural, timber, and fishing focused. They lived in continual scarcity, but not famine. They made just enough to survive, but not enough to thrive. And they ran out of land in the 19th century, leading them to the state capitalism model, which is a post-industrial revolution, which is after the 1900s, and designed to benefit the public through different public programs. The taxes were very aggressive, leading to high tax results, making them one of the heaviest taxed countries in the world. Things including government health care, retirement funds, etc., things that you would associate with a more socialist economy. All right, now the economic overview of Norway. Norway's GDP is actually $346.3 billion. They have a 2.2% GDP growth rate per year, and their GDP per person is $67,200, making it one of the largest in the world. Now, their main industry is actually oil and petroleum products, and they're actually the eighth largest oil exporter in the world. And the Heritage Foundation, they rank them on their freedom scale of 70.8% free, which you can see on this graph to the right. Norway is actually the pink line, Sweden the yellow, United States blue, and the world average is gray. Now, the Heritage Foundation actually ranked them as the 32nd most free nation in the world, making them mostly free, higher than most, but not higher than all. Okay, so we talked a little bit about state capitalism earlier, but if you don't know what that is, Merriam-Webster Dictionary actually defines it as an economic system in which private capitalism is modified by a varying degree of government ownership and control. Now, that may sound familiar to you who have studied economics. That sounds like socialism. You'd be right. For example, the Norwegian government actually owns 67% of their largest oil manufacturer called Statoil. They're the 11th largest oil company worldwide, the 26th largest in the world by revenue in terms of all companies, and they're traded publicly on the New York Stock Exchange. But yet the government still owns 67% of all their stocks, which really lends a hand to their socialism. Now, the positives and negatives of state capitalism. A positive can be their consistent handling of large projects, such as infrastructure. They all have the same exact outcome. They're all made by a single company, and therefore it is consistent. They also provide larger investment streams through taxation. Now, we'll get into the negative side of that in a second, but it also allows for companies to have more money to operate their businesses, which allows for them to spend more money on the companies. It can also boost national pride within state-owned firms. They'll actually be more apt, the people of Norway will be more apt to have a sense of pride within that company because they actually pay for it through their taxes. Now, some of the negatives is that it can have a negative impact on innovation. We all know that if a government regulates, we've seen this with North Korea, we've seen this with communist China. It really hinders the innovation because the government determines what goes and what doesn't when they own, for example, 67% of a company. Now, the large investment derived from tax revenue, that's a negative also, because what if you didn't want to invest in state oil or you didn't think that their policies were necessarily correct or ethical? Well, too bad. You still have to invest in them. You still have to give them money. Now, that's a negative for those of us in the US because we actually think, well, if we don't like it, we don't buy it. Well, that's not the truth in Norway in terms of their investment because the state determines what they invest in. And also has limited potential to optimize a firm's strategy because they're stuck. Now, suggested changes would be to change state capitalism to a laissez-faire capitalism. Let the market decide the winners and losers, like what we're used to over here in the U.S. Limit the government subsidies. Let the investment actually decide what will work and what won't work. Let them win or let them lose. Release the government stock holdings. Make the government give it up so that the people can decide if they like the company or not and if they want the company to win or lose again. Now, it also established more corporate honesty and integrity because it's actually been shown that government owned companies actually have a higher chance to be corrupt because they actually get more leeway with the government in some of unethical or immoral practices. And of course, this is to take place over many, many years, not immediately. For example, those who know of the Swedish, when they switched from the left hand to the right hand side of the road, they changed it overnight. And what that did is that actually caused multiple accidents, traffic jams, and just an overall headache. Now, like I said, this is supposed to take place over many years, not immediately. And we'll see them grow. We'll see them have a higher GDP, a higher growth rate, and a higher freedom rate, which that lends to overall, as studies have shown, to actually increase GDP per person and overall income per person. All right, guys. Now, in summary, Norway actually was in the feudal model when they were in their collection of kingdoms. They moved to a socialist model known as state capitalism. It's just a fancy name to put onto socialism to make it sound more appealing. And now, my suggestion is actually to change it to free market capitalism to let the market decide what companies will actually succeed and which ones will fail, like we see here in the West and actually in Hong Kong and Singapore. All right, guys, thanks for tuning in. If you have any questions, please put them in the comments. I'll try to respond to them as quick as possible. And I hope you guys learned a little bit about Norway's state capitalism. And once again, guys, thanks for tuning in.